What's up, everybody? What's up? Let's get into episode 3 of our trade recap series. And today was the big CPI day, which resulted in a pretty big move right around 7:30 in the morning. Today, we did not take any real trades. So, what I'm going to be doing is I'm just going to be doing some quick chart analysis. Unfortunately, I cannot use Bookmap as well because Bookmap is kind of down for me. So, I cannot use it. But we can do some simple chart analysis, which does prove the market movement as well. So let's take a look at NQ real quick. NQ, we marked our liquidity level. One is up here. We have another one at these lows. And we also have another main liquidity level at this low. These three are our main liquidity levels. We also have minor liquidity levels at this area and this area before market open. And on ES, something kind of cool happened, right? We had our main liquidity levels marked out above and below with our minor ones as well. And we saw that right after we took these two main liquidity levels, or our main liquidity level and then our minor liquidity level, we saw a big dump back down. And that's when the real move happened. And that's where the main move happened for today. So this truly shows the power of liquidity as well, even during news days, right? Because if you understand where liquidity is placed, right? Market, especially when a big move is waiting to happen, it needs to have a lot of money in order to move one side or another. So we moved pretty strongly towards the upside, swept that liquidity to move and make our big move, which is accounted for the downside. So keeping that into play, if you go down on the chart analysis, I charted everything out, but here we go. The first trade I see that is apparent is this trade over here. This trade right here would be a V2 trade because we take a retracement back into our V2 levels around here, and we wick down and break the structure of the previous candle. That means that we could have entered somewhere around this area with a stop above these two wicks, and realistically we would place our stop above the 0.75 level as well, targeting the next key macro liquidity or potentially the 50% of our zone. We kept it as the touch of the zone or just this key macro level down there in order for us to ensure that we secure our profits, which results in a 1.66 RR, which is really good. Now, let's take a look into further trades within the day as well. So as you see on ES as well, on the 15-minute market, when news happened, we came up, swept the liquidity, and within 5 minutes itself, what happened? Within that 5-minute candle, we went all the way above, took our liquidity, and with that money, we pushed down. That highlights that this news could have actually been aimed at the negative, and consumers and buyers and sellers would have taken it as negative instead of positive. And as you see on Financial Juice as well, CPI did come out negative. That's the magic thing with news as well. I'll be testing this more and more as the days and weeks and years go on. But typically when news happens, we sweep liquidity and we make our actual move later in the day, right? So we saw that CPI came out negative, but what happened? We still pushed up, and that's okay. We still pushed up, and what did that do? That took our main liquidity level on ES and NQ. Now with that money, later in the day during New York session and New York session open, what happened? We saw a big dump down, and that truly highlights the importance of news and overall market sentiment during the day. So during this day, the one trade I saw was a V2 retracement play, push back up. We already talked about that, but later in the day, we broke our 15-minute zone, and some strategies say that when you break a demand zone and you retouch it, you can take the shorts again, but I personally would not have taken that just because of how strong this buy candle is. But with Bookmap, confluence is much easier. One trade that I do see, which is 2 confluences though, which I marked out, is this trade over here. This is a V2B or inverse fair value gap trade, and essentially what happened was broke structure to the upside on the macro level, place our stop under this candle, and we target the next macro level, which is around there. This trade would have been a great inverse fair value gap play because we created a fair value gap here, and here we broke it. And what do? We continued to fill this entire range. This trade would have been splendid, and so would have this one. But because today was CPI, the day can be quite unpredictable, especially from the 8:30 to 9 o'clock-ish time frame. And just look at the wicks over here. Each wick is around 200 ticks in itself, and we're usually trying to capture onto 200, 300 ticks. So when our wick is just that big, that truly shows how much volatility there is in the market. But that's basically all that we saw today. The main thing for today is that we understood that the market pushed up during CPI release, but then actually needed to go down during market open. So we need to understand that news can sometimes take liquidity for the later trend of the day to be supporting its actual release, which was negative. That's basically all I have here for today. Also, here's a quick friendly reminder to join the Discord server, which is completely free for every single thing inside the Discord server that is not admin based. And in the server we have our news bot, which gives us news every single day before 2 hours before market open. As you see today, our users were alerted about CPI coming out today so that they're prepared. Before trading, I always encourage to check out the market and to check out the news. We also have our crypto chat, and we're also looking to get into different series such as teaching member how to trade in 24-hour challenge and much more fun challenges. So if you guys get into the server and shoot me a DM, you can be the ones in the challenges and we can make V2 grow together. Thank you so much for watching episode 3 of our trade recap series, and I'll catch you guys next time.